Hi guys, welcome back to my YouTube channel. In this video, I'm going to cover about does beneficiaries pay taxes on life insurance or not. So let's see. Generally speaking, when the beneficiary of life insurance policy receives the death benefit, this money is not counted as taxable income and the beneficiary does not have to pay taxes on it. However, situation can exist where the beneficiary is taxed on some or all of a policy proceeds if the policyholder elects not to have the benefit paid out immediately upon their death, but instead held by the life insurance company for a given period of time. The beneficiary may have to pay taxes on the interest generated during that period. And when a death benefit is paid to an estate, the person to person inheriting the estate may have to pay estate taxes. However, detailed below, there are several ways that these estate taxes may be avoided. Key takeaways: in a typical situation, inherited money from a life insurance policy beneficiary is not taxed as income. There are a few exceptions to this common rule of thumb. In some cases, a beneficiary may have to pay tax on any interest the policy accrued. If the policyholder named an estate rather than an individual as a beneficiary, the person or people inheriting the estate might have to pay estate taxes. You must list beneficiaries, individual or an estate, on your life insurance policy. Interest income. Let's see guys, what is interest income. Income earned in the form of interest is almost always taxable at some point. Life insurance, no exceptions. This means when a beneficiary receives life insurance policies proceed after a period of interest accumulation rather than the immediate upon the policyholder death, the beneficiary must pay taxes not on the entire benefit but on the interest. For example, if the death benefit is $5 lakh but it earned 10% interest for 1 year before being paid out, the beneficiary will owe taxes on the $50,000 growth. Estate and inheritance taxes. One poor decision that investors seems to frequently make is to name payable to my estates as the beneficiary of a contractual agreement such as an individual retirement account, an annuity or life insurance policy. However, when you name the estate as your beneficiary, you take away the contractual advantage of naming a real person and subject the financial product to the probate process. Leaving item to your estate also increases the estate's value and it could subject your heirs to exceptional high estate taxes. Section 2042 of an Internal Revenue Code states that the value of life insurance proceeds ensuring your life is included in your gross estate if the proceeds are payable to your estate either directly or indirectly, or to name beneficiary if you process any incident of ownership in the policy at the time of your death. Using an ownership transfer to avoid taxation, federal taxes won't be able on many states due to the Tax Cut and Job Act (TCJA) of 2017. The exemptions amount was increased to $11.7 million for 2021 and $12.06 million for 2022. Meanwhile, the maximum state tax rate is kept at 40%. Some important point is given here. Many of the changes enacted by the Tax Cuts and Job Act, including the higher federal state tax exclusions, are currently set to expire at the end of 2025 unless Congress extends them. For those states that will owe taxes, whether life insurance proceeds are included as part of taxable estate depends on the ownership of the policy at the time of the insured death. If you want your life insurance proceed to avoid federal taxation, you need to transfer ownership of your policy to another person or entity. Here are few guidelines to remember when considering an ownership transfer. Choose a competent adult entity to be the new owner. It may be the policy beneficiary. Then call your insurance company for the proper assignment or transfer of ownership form. New owner must pay the premiums on the policy. However, you can gift up to $15,000 per person in 2021 and $16,000 in 2022, so the recipient could use some of this gift to pay premiums. You will give up all the right to make changes to the policy in futures. However, if a child, family member, or friend is named the new owner, change can be made by new owner at your request. So guys, thank you so much for watching my video till end.